All right, well, yeah, welcome to a Tuesday stream. I hope everyone's had a good weekend and a good start to the week. Yesterday was also a little bit tricky, I believe. But plan for today is to go over. Get the memo notepad out here. Attach it to this. Here we go. So the plan today is to run some review on NQ, as usual. Kind of do like a top-down analysis. Steve doesn't have volume. Might have to restart this. Let's see if we can help Steve out. Just double checking. Is it just Steve with the volume issues, or is it just or is it everybody? If everybody can't hear me, no one's gonna respond. Just double check. Okay, so some people can hear me. Yeah, I know Discord's got some issues, so yeah, let's keep going. Go to just try that. Okay. Here, you know what I'll do? I'll end the stream and come back in. You guys all just stay here 1 sec, okay? Just stand by. Okay, let's try that again. Steve, you good? You can hear me? Hopefully you can hear me now, brother. And we'll keep going. Okay, so let's go to the trading thing here, blah, blah, blah. So this morning, when we show up to the charts, first thing we always got to do is we need to check what's going on with the economic calendar. This morning, we had a 10 a.m. orange folder, the consumer confidence. It's not to say that you should, wait to trade with these orange folders, but it's always good to be mindful that they're there because sometimes it can explain what you're seeing in price action. So if we know that at 9:51 we're minutes away from an orange folder, and then we look at the chart and you see ES barcoded like this, we can kind of figure out why price is barcoded, right? Price or the market is waiting for that orange folder to drop. And the thing is, like, you can never tell which folder is going to hold more importance than another besides it being, defined as a red folder. But this is where you can at least start to put some fundamental analysis together and understand the type of condition you're in. So given that ES was really barcoded, I did mention, we're missing sweeps on the top and the bottom. Like I was looking for a long off of the London low. I was looking for a short off the H1 buy side liquidity. And anything in between is like the twilight zone for me, right? Like I'm not going to take a trade and force something no matter what. Even if there are FVGs, right? Higher time frame FVGs. I'm still not going to, force something. I need to wait for conditions to be met. So from that perspective, I think today there was a good read and discipline in that. As price started to move to the direction that we wanted it to, which is the daily EQ, which is the London low, this is where things started to get tricky. Okay, so let's quickly talk about what that looked like. And I'm just going to take that off for a sec. And we'll just quickly kind of talk about what happened in this area here, this pocket. Okay, so let me just change this to London low. And I'll just back this up just a little bit. Okay, so we get the sweep at about 10:23, and we get this type of setup form. Okay, right here. Just want to double check that NQ had the same thing. Okay, so we get the sweep. Now, the problem with the sweep when it happened is that the size of this gap. Now I'm looking at it on MNQ, and you'll see that it's showing that the gap is 5.75 points. For me, my limit with that gap, like in terms of the minimum size requirement, is going to be 5 points. But I'm not using MNQ to base my decisions. I'm using NQ to base my decisions, right? I'll execute on MNQ, but my decision making is off of NQ. And this is a great example where you have an FVG that's sized at 3.5 points, below 5 points, of course, my limit. And it's, obviously you get a nice reaction, but the problem is that the FVG is too small. And price is literally going to just blow through it if, we do see some sort of retracement. And sure enough, that's what we end up getting, right? We get that right here. Price just literally blew through it. So very good read in terms of sticking to the rules, understanding why, I use FVGs that are sized 5 points and higher, because I know that they're more probable. Doesn't mean it's going to work all the time. Of course not. Sometimes these small gaps work out too, but it's just about siding on the highest of probabilities versus putting yourself in a lower probability scenario. So I avoided that loss, which is really good. And then we get this massive, crazy spike. Okay, now what was this? This is 10:30. Let's go to Financial Juice. And it looks like right here about 10:30, Trump's tweeting saying all mines have been removed and detonated from the Hormuz. And then Iran has been notified that any ship or boat placing new mines will be immediately and systematically destroyed. So he shares this on Truth Social. Market reacts. Now, I'm going to be honest with you. Whenever you see a wick like this, now it looks way crazier on NQ than it does on MNQ. But the problem with a wick like this is, and I learned this from my crypto days, and I don't know if this is how it transcends into the futures market. I don't know if it does, but in the crypto market, whenever you get like a long wick like this, usually 50% of that wick gets filled. So even though it looks like, all the liquidity got swept out, there's actually a lot of orders there now that are showing that price might want to sweep it out, 50% of it, right? So I've seen this in crypto a lot. The thing is, with NQ, I don't know if price reacts that way. Okay, so when this happened, I was just going to be very systematic about it. There was this 1 minute IFVG right here. Okay, I'm just going to mark it like that. Now, I just want to also share that there's a 4-hour gap price traded into. And if I just mark off the low of the gap here, and I'll just mark it as a FVG right there, we're trading into a 4-hour FVG, and I believe there might have been SMT, maybe not. Let me just double check. I could have sworn there was. Maybe it was over here, not when price tanked. Just double check. The indicator is going to flash anything. Okay, so no SMT. That's fine. Of course, whenever we see SMT inside of an FVG with ES, that's a really good sign. Here's the setup, and I was literally just waiting for this to play out. Now, a couple things to note. The momentum on this candlestick, okay, it looked like price was going to close above it, and then at the last second, it didn't. So one thing to talk about, if you ever get into a situation where you kind of front run that entry thinking the momentum is on your side, and we got LRLR here. There's so many reasons why this should go higher, right? London low has been swept. But if you ever get stuck in a situation where you enter the position and then, let's say it's within, the I don't know, 10 to 30 seconds before the candle closes, and then at the last second, price closes back inside. This is where it gets really tricky, and you have to start to make a decision. Do you just exit and take the loss, minimal damage, and wait for the confirmation? That's one option. The second option is you wait to see if another candlestick will close, like if the next candlestick will confirm it, because then you're in position and you're good. Notice this candle doesn't actually close. Okay, do you wait for another candlestick? Problem is you never know what's going to happen next. Now, if you have a stop loss that's placed, let's just say you entered somewhere around here. Okay, and let's say you place your stop loss at that wick, right? It's a pretty defined point, 41.75 points, not bad. You know, you're targeting all of this up here. Let's just put 1R like this. Okay, let's say something like that. You're still in the position. Okay, even if you did get in and you were like, let's wait and see. Your stop loss is here. You do get a close there. You know, you're now risking taking a stop loss, and the trade actually didn't even confirm. Okay, so there is that risk, but you can just wait or take the stop loss. I mean, it's a trader's choice at this point, right? Like, and then as you can see, now you get confirmation. This is how I would have played it. Okay, if I enter a position like this and I get faked out, I'll wait for that next candlestick on the 1 minute time frame, because that's what this trade's on, to confirm. If it doesn't confirm, I exit the position and I'll just take the minimum loss on that, whatever it is, because I'd rather be safe than sorry. I'd rather wait for an entry with confirmation than gamble 50-50 if it's going to close or not, because this candlestick right here could have easily taken the position out, right? So by waiting, you now get confirmation here. Okay, and now what that means is you can actually readjust your position size, because initially I was using this wick here as a stop loss point, but now we have these lows here, so you could use these lows. Now you have a 0.75 point stop loss. Let's put this to 1R. Right, I like to take 1R trades, and what we can do is identify to the left, where do you go break even. So I wouldn't go break even like say here. I think it's a little too close. I think what I did was I placed my break even about here, and then my TP would have been somewhere up here. Now, based off how this position went, here's break even. Stop loss gets moved to break even now. My TP for 1R just literally just gets missed by, you know, like 5 points, which really sucked. And then the next candlestick takes me out break even. Okay. This is something you have to learn how to do, is to be able to react to the levels that are happening and, you know, accept the fate that you might get faked out on a stop hunt, but you have to follow these rules. Otherwise, you know, you're going to potentially take stop losses that are unnecessary, right? And you have to be defensive. So whenever you take a trade, it's not always about just like, you know, what are the reasons why I want to be in the trade? You got to think about the reasons why you shouldn't be in the trade. So like if I'm looking to the left and I'm thinking, well, this is my break even, my TP is literally here, you know, anything up here is TP. But if price hits this level, like I have to be finding reasons why to not be in that trade. So I'll move my stop loss to break even, because you never know what's going to happen, right? You never know this is going to happen next, right? And that's what happened. It happened really quick. So stop loss was averted there, hit break even, live to see another day, okay? Now, the thing with positions like this is I refuse to kind of give up on what was happening here. I thought this is really, really powerful in terms of like a line in the sand. Like you got London low here, you got the daily EQ, prices, you know, hovering around here. If I look at ES, so ES had swept London low. I believe there was is it an H4 level that was there? No, hourly level. So ES has this hourly level here. Okay, and it also has this hourly level right there. And I'll just go back. So you have the daily EQ, you have an hourly sell-side liquidity level, you have London low here, and then we obviously know price swept the H1 sell-side liquidity, Asia low down here. So I'm watching what ES is doing while NQ is kind of chopping around, okay? Now I'm okay with whatever's happening here. Now, especially when you start seeing this. Now here's the thing. You can see that we have a clear IFVG right there, right? So if I go back to NQ, the next setup I started looking at was this position right here, okay? I was literally looking at this. So at this point, we end up getting a pretty healthy reaction. I thought price had swept in pretty good here. I was okay with it. I mean, it looks like you're holding support off the daily EQ at this point, right? So there's your confirmation of the entry. Now, the problem or the challenge that I faced in this position was like my stop loss. So I had placed my stop loss like about here, 48 points. And this is 1 hour right here. So this is what the position looks like. Is there SMT? I believe there is somewhere in here. Okay. And then you start getting this. So daily EQ being respected. The thing is, I just didn't anticipate price to come back this hard. I thought if price starts to accept back below the daily EQ, then the wick's going to get filled, right? Because we talked about that in crypto, how that often happens, right? So if I were to mark off, you know, like a 50% level here, like I would anticipate this blue line to get tagged, right? Coming lower. That's what I usually do with crypto is when I see wicks like that. So my stop loss was about here. I had a tighter stop loss, and then I ended up getting stopped out right there. Okay. If I had a deeper stop loss, 63 points, just because of how long this wick was, I think I would have been in a safer position because then this happens. Look. So this kind of sucked to see because this is where we're at now. So if I had my stop loss here, here's 1R. Are you taking profit early? I think I probably would have definitely taken profit early. This happened just as we started this stream too. So I mean, I probably would have taken my TP. And if I didn't take my TP, I would have moved my stop loss to break even. And then if I didn't get it here, then I would have been break even here. So in hindsight, we can reflect on the way price moved and how we could have played it. You know, for me, I took the stop loss right around here. I had a tighter stop loss. I just didn't anticipate price doing this. I thought for sure. And I mean, even when you say for sure, there's no for sure's, but I felt pretty confident that seeing the way price was moving like this, and then this recovery, that there's a good chance we get this move. The crazy part is this move that I was anticipating doesn't happen here after entry. It happens after price stops me out. So took a stop loss. It is what it is. I got to still do a little bit more journaling. But that was the two setups today that I was in. One setup I want to also talk about that happened earlier would have been in pre-market. So let me go to MNQ for a sec. And let me just go back to the open right here. Okay, so at market open, we end up getting a H1 sell side liquidity sweep, okay? And I'm going to show it to you right here. Back to the chart. Okay, so mark the levels, and this is what it looks like. So 9:30, right at open, this is what the setup looks like, right? When you look at this looks beautiful, right? It looks very, very nice. But if it looks too good to be true, it might be too good to be true. And we always got to go over our confluences, even if you start forgetting things because the FOMO kicks in. And I did have a little bit of FOMO because I stepped away to make a coffee, and then I came back and I saw this and I was like, oh shit, I'm going to miss this trade. Then I was like, let me just do my checks quickly before anything goes any further. And then I realized that the problem with this setup are two things. Can anybody mention, or can anyone tell me what those two things are? If you want to make note of it in the chat, feel free. But there's two reasons why I stayed out of this trade. I'll wait 10 seconds to see if anyone will type in or why I waited or why I did not take this trade. Above the daily EQ. Yep. Bing, bing, bing. That's answer number one. There's two reasons. The daily EQ is reason one. So if I take this trade and go long in premium, I'm breaking a rule, right? Because for me, I want to trade on the right side of discounted premium. Anything above the daily EQ, I'm looking for shorts. I'm looking for buy side liquidity, not sell side liquidity. And anything below the daily EQ, I'm looking for sell side liquidity, not buy side liquidity. Flare says time. Yep, time. I think that's another good answer, because if you think about when this IFVG confirms, it confirms literally at 9:32. Let's put that indicator on, see if it slaps the setup on. There, right there, 9:32. Ideally, you want to let price breathe, right? A little bit with time, like wait like 5 minutes or so, because there's a lot of weird movement that happens. There's actually another reason why I wouldn't have taken this trade, even if this trade, let's say this trade was on the right side of premium and discount, and let's say it did form at 9:32 like it did. There's one other major reason I would have stayed out of this trade. And the reason is that this setup was non-singular. See this? Anytime you have price action, like an IFVG that confirms, but it confirms into an FVG, like a gap, a SIBI, that makes it non-singular, okay? So yes, the target for this sweep here was the LRLR, was the SIBIs up here. What you don't want to do is be taking longs into bearish market structure, like a SIBI. Watch what happens. You see how price just chops around like this? This is why I don't take trades like this. Now, can a trade like this still work out? Of course, anything can work. But it's not, once again, like I said at the top, it's not about, taking every single setup you see robotically. It's about, once again, putting yourself into trades that are higher probability. Okay, this is not high probability, even though it looked really, really good. Okay, so if I keep hitting next, yes, there's great support coming off of the FVG. I had mentioned this too. I had mentioned that, where did I say this? Right here. I said the gap has continued to reject price action since the open, but price is once again trying to break it. This is a perfect example of why I avoid non-singular subs. Why? Because there's so much chop involved there, right? And then I said that the IFVG itself was respected nicely there, right? So analyzing it and watching it is one thing. Actually being in the trade is another thing. This trade could have easily lost, right? This could have easily lost. And if I just keep hitting next, it does end up going to a target. And like I said, it can obviously work, but that's not the point. The point is to put yourself into high probability trade setups. And for me, this would be breaking a rule on multiple fronts. And the most important one was that I'm taking a long in premium. That alone was enough for me to say, no, thank you. So I watched this trade play out. Depending on even how this position would have been taken, okay, let's just say, you enter here. Like, where's your stop loss? Are you going to drop it all the way at the bottom here for almost 70 points? Probably not. Maybe, I think I probably would have had my stop loss like around here for about 46 points. And then look, there's a wick right here that would have wicked me out. Unless I had a soft stop loss here and a hard stop loss here, and I waited to see if price closes below the FVG. And in the case that it doesn't, you stay in position, right? So, that was interesting. So, missed that point. I'm just going to double check something quickly with the price action. Looks like we're getting a move off the daily EQ here. Yeah, there's a 2-minute setup there. Just missed sweeping it though, but there is a play there potentially. Like I said, I'm just watching, not really doing anything. You could have a play like this, or if we move to the 1-minute time frame, pretty big to be taking it from here to here. I don't know if I would have wanted to go long way up here, so I would probably have used the 2-minute setup personally. So something like this. I just want to double check. Did ES sweep anything? Oh, so ES is actually at the daily EQ too. So it gets really tricky when you start seeing this happen. And that kind of brings me to the next topic of conversation, which is the relationship that the DEQ has with, in between. What relationship the DEQ has with NQ and ES. Okay, it's really, really important to always be understanding the distance where price is trading to the daily EQ, because the daily EQ acts like a massive support and resistance level. Okay, so earlier in the session, I had mentioned how, let me just move back down here, right here. I said, so this is what the chart looked like at about 10 o'clock in the morning. I wanted to see NQ sweep that daily EQ and the London low. I wanted to see if ES would hold the daily EQ, because then it would just like bounce off that level. But if it were to go lower and start sweeping here, the key is that you want to keep space for price to move, because if ES starts to aggressively move into the daily EQ and you're trying to go long on NQ, what'll happen is if ES rejects off the daily EQ, then it's going to pull that long position on NQ down, and it's not going to give the momentum that it needs. And I had mentioned that here, right? If ES loses the DEQ, it does have that London low below. The issue turns into the space and distance between that and the DEQ underside if we're trying to go long on NQ. So I hope that kind of makes some sense. And then as NQ starts to sweep that London low, you can see ES rejecting off the daily EQ and moving lower, right? And then we already talked about those positions and what those meant. And then this is what you end up getting, right? So now you get something like this. And this is what I wanted to see. I wanted to see nice distance between the daily EQ and the ES price action as NQ is sweeping the London low and the daily EQ, setting up a potential long. So we already went over the long positions itself. But that's basically that relationship, right? And the other thing too is, like, if you look at what's happening right now between NQ and ES, and let me just go to the 2-minute time frame for a sec, because then we can start to observe what we're seeing. So here's ES moving into the daily EQ, and here's NQ kind of bouncing off the daily EQ, right? So if ES is now starting to aggressively close above the daily EQ, right? So you're getting massive market momentum here, right? Something like this is not healthy, right? You got a long wick, long tail. It's showing you some sort of indecision. But when you start getting strong bodies like this, these are bullish engulfing candlesticks. Even a close like this is pretty good because it closes above. And then you can now see that NQ setup starting to take off. The problem for me here now is also obviously time, right? So, and I already hit my limit. So let's say you're at 34.25 points. You know, does this hit 1R? There would be 1R for me about here. Is there SMT? It does not look like there is. Nope, no SMT. But you see the strength now playing off on ES with the DEQ. So always observe what the candlesticks are doing as they approach the daily EQ, because it tells you a story on strength, right? And we're about to hit 1R there. So not easy price action today, I'll be honest with you. Just given what we saw within the kill zone. But as you can see, that idea that I had, which was to try to go long, it is working, right? The concepts and the ideology of kind of framing the trade using these levels, you can see how it makes sense, right? So even though I took a stop loss, which is fine, shit happens, it's good to see that price did still react as intended for. So this is about to hit 1R. Not bad. Pretty good price delivery. Tricky day. Let's see if there was any news. Let's go to Financial Juice, because like I said, there was a lot of news rolling through. Let's see here, 11:36. There's more news here. And then, of course, between Canada and the U.S., there's that trade war happening with the tariffs now getting thrown, putting the market into a frenzy. So that kind of throws things off as well. Let me go back here. Actually, right here. Look at that. Missed it just again. Wow. This is funny price action today, guys. Go through my notes. Okay, so one other thing we'll talk about is... Okay, so we talked about all of these three. Let me just double check. Yeah, we did talk about all that stuff, which is good. I think the only other thing to talk about, really, if unless anyone has any questions or whatever, is just kind of a quick rundown on... Let me just turn off some of these indicators for a sec. Just what the market looked like from a higher time frame, right? So this is the 2 to 6 a.m. candlestick, and then this is our 6 to 10 a.m. candlestick, right? So if we're trying to figure out like bias and things like that, whenever you get a candle closure that looks like this, even though it is above this swing point right here, and you know there is that little FVG tucked in, you do got LRLR up here. I'm going to just make a note of this level right here as well. Okay, so you show up to the market, it's 9:30, and price is trading at let's see, what level was price trading at 9:30? So market open would have been at about 297. Just gonna mark it on the chart just so we have a nice visual. Just gonna put the word open. Let's go back to the 4 hour for a sec. Okay, so when the market opens, the price is trading right here. Okay. However, the previous candlestick looked like this. So if you're having issues with like bias, the way I would kind of explain this, because it is intuitive, it is, I mean, it is subjective, because you can't just be completely mechanical and say, well, price is trading at a bearish FVG and has swept a H4 buy side liquidity level, right? When market opens right here, right? The candle doesn't look like this. It's right here. But the thing is, if you look to the left, you have a massive bullish engulfing candlestick. In my opinion, you can't be bearish in this situation. You have to be bullish, okay? And if you're not bullish, then you should just be neutral, okay? And the reason I say be neutral is that you can only go based off what the last candlestick did. And if the last candlestick is showing you massive bullish aggression targeting this level here, then trying to take a short while you're up here is a no-go. Like, if anything, you want to try to be taking shorts like somewhere a little bit lower, right? Where it's like filling this gap. And then you'd be targeting this gap here, right? From a higher time frame perspective. So if we go to the 15 minute though, and I'll just do, so this is the open right here. And we know that there's this sweep that happens about here. But the problem with that is it happens at 9:15, so it's early, right? But I'm still going to mark it. 15 minute sell side. Let me go to the 1 minute. Oh, it looks like it swept it right at the end. Okay, perfect. So just to put this into perspective, okay? And I said to be long, right? Be bullish because the previous candlestick was showing bullish momentum. And if you're neutral, then you're just going to use 15-minute market structure to execute on the 1 minute time frame. So if I'm looking at this in terms of like, trading CISDs or unicorns and things like that, you have a 15-minute sweep. You have an H4 buy side liquidity level that got aggressively closed over. You have a H4 SIBI that's also being flipped into support, right? It was resistance, and now it's getting flipped into support, okay? And then if you look to see like what other things you have going on for this, you got that liquidity sweep right here. Mark it like that. And then you also have the, actually, what is this? Okay, so right here. So here's your CISD. And truth be told, like, I've always been a big fan of CISDs. I think it's such a key concept to learn. I might not use it to trade, but I mean, I love using it in terms of like reading market structure, because when you get that sweep in a, with higher time frame liquidity involved, it's just so like blatantly obvious at times, especially in hindsight, right? So if you're looking at this, there's your CISD. If you're looking to trade it like as a unicorn model, I'd probably, use something like this. I would probably just, it's tricky because like you could sit just like brick the whole thing up like this. I kind of bend the rules a little bit when I deal with unicorns. I would just kind of take this whole range up until this bullish candlestick right here, this series. Some people might have just used this candlestick right here, but I think because there's a designated low here and a designated high, that anything in here is just consolidation. So I would just kind of bridge the whole, or like stack the whole range. And what that means is now, here's your CISD, here's your unicorn. And if you were to take a long, let's say off of this level, you know, your entries right here, where's your stop loss? You know, are you going to have a 65-point stop loss? You know, are you targeting the highs for 1R? Like, you guys know me, I like 1Rs. Even if it's a unicorn, it doesn't matter. I would still look at 1R. But there's your 1R trade. And then look at what happens next, right? So I think beyond the unicorn model, if I get rid of the breaker block for a sec and just say, hey, why not take that trade off the CISD? I think the CISD actually gives you a better RR, because if you're looking to take a trade using the CISD with a limit entry, and then your goal is to kind of target this swing point up here, you've now pushed your RR from 1 to 1.27. And that little bit can go a long way, right? And you have a nice protected swing point here for your stop loss. Well-defined levels down here, right? CISD's there. You also have the FVG here, right? Which is what creates... well, sorry, the FVG is like right there, but you do have an FVG here in the event that price starts to retrace back into the scene of the crime. So my point of the story is this is how I would have read H4, 15-minute and 1-minute time frame alignment today, and there was a long on the table, and it did work out for 1R. I think Matt took that trade. And did anyone else take that trade, by the way? I'm not sure what everyone's trading, but I'm just curious. Did anyone take that trade? Let me go to analysis. Okay, so look at that. So there's the NQCSD target. Okay, so it's the same thing. Okay, perfect. So and there's that 15-minute swing low right there. So it was exactly the same read. It goes to show, like, being able to, read top-down analysis with market structure alignment is very, very important. Whether you're trading IFVGs or whether you're obviously trading CISDs and unicorns, like, I think it's even more important if you're trading CISDs and unicorns. I think you need that multi-time frame alignment to make that setup work for you. I've tried to look into ideas of kind of aligning the daily EQ with, let me just put that back on the map here, like aligning the daily EQ with those types of positions. And, it's hit and miss, I find. Sometimes it protects you, sometimes it doesn't, in the sense of like this long worked. But if you're using concepts of premium and discount on a, from a daily candle perspective, like you're taking the long in premium. Right, and that goes against the whole IFVG thing. So you can't mix, I think, the two types of systems, okay, and these kind of confluences, because if you do, it's going to start to confuse the trade that you're actually taking. Do I think you should be mindful of the daily EQ? 100%, right? I think there was a trade that happened earlier where if you were mindful of where the daily EQ was, like you're taking a long, I think, into the daily EQ, something like that, could prevent you from going long, because it's a key support and resistance level, right? So let's just go back to the NQ chart for a sec. I just want to see what has happened with price action since. Oh my goodness, it still didn't hit that 1R. Unbelievable. That is actually crazy. So if you had a tighter stop loss here, this is 34, but like let's say you had a tighter stop loss, this is clearly hitting 1R then, right? So it goes to show how you place your stop loss. It can impact whether that trade's going to be a quick win or a quick loss, right? So in my situation here, I placed my stop loss similar to this, like a little bit underneath the IFVG, and I got stopped out. But if you had placed it a little under the IFVG here, you get your TP, right? If I had done something like this, I'm still waiting for 1R, unless I'm not waiting for 1R and I just take it early, right, when price just kind of got up here and just hit manual exit. But who knows, this could still go. You got ES coming back to the daily EQ, so if it finds support here and bounces higher, then this should go like at least like I would think this is going to hit 1R and then take out this swing point here. So food for thought. This is kind of how I'm analyzing things. Yeah. Does anyone have any questions about anything? Anything I've gone over? It's pretty, I mean, there was, I wouldn't say it was uneventful because it was eventful, but it's just like this type of price action is just not easy to trade. Like it's not smooth. Like, I know there was like a position here potentially to go short. And I was looking, okay? I was looking. Let me explain to you what I mean by that. So if I just exit all this, okay? So right here at open, at 949, like I was looking for that short, and I'll explain to you why. This candlestick right here at 9 o'clock, so it closes at 10. It was actually originally below this wick, and I had marked this wick off, okay, as a valid H1 swing point, and I was watching this level. But the thing is that as the final 5 minutes starts to unfold, right? Look at the clock, 9:48. Sorry, last final 10 minutes. It ends up sweeping that H1 level, and that basically now means that this is not a valid H1 buy side liquidity level. It's now just going to be a 50-minute level, right? See how it's just a 50-minute now? And because it was just a 50-minute, I opted to steer clear because we do have an hourly right here, and I thought, well, maybe price will sweep a little higher and actually take out this H1 level, and then I would have definitely been looking for that short, right? So here is 949, and then this is, I mean, by 10 o'clock we were way down here. But if price had kind of closed somewhere around here and then eventually went up for the sweep to take this level out, and then you have a short like this play out, depending on certain criteria, like how many points is this FVG, 6 points. I mean, that's what I'm looking for, 5 points and higher. Here's the setup. I mean, this is what typically I want to see with price delivery, right? I want to see nice reaction off of a level, strong momentum closing through the IFVG, confirming it, lots of LR below, right? You could place your stop loss here, target the LR below. I mean, this right here is what I really would have wanted to take, missing the criteria though, right, for that hourly sweep. So sweep gets front run. Was there SMT? Yep, SMT. Was there a bullish FVG involved somewhere? Nope, we just had those wicks. Yeah, so actually let's double check one thing. Yeah, so no FVGs, but SMT, 50-minute sweep. I mean, this is ideal. And I mean, you got the LRLR here, you have your daily EQ here, right? These are all major targets, major draws on liquidity. And if I just hit next, you can see price ends up taking out right there, right? And then that's where we were looking for those longs. But point of the story, this short, I just wish it had hit those criteria for me, because then I would have easily taken that short. And like I said, this is what I'm looking to trade all the time. And more often than not, you get this. But then it's really, really important, I think, especially as time moves forward and I'm like trying to like self-reflect on what I'm seeing on the charts and the positions I'm taking. I think the more you're able to expose yourself in review as to like what an A+ setup structure-wise looks like, right? Like the way these candles are formed versus what anything else looks like that's not A+. That alone can help filter you out of like unnecessary trades. Because remember, you don't have to be in every trade, right? Like you don't have to be in every trade. So like for me, this was the long trade idea. And what's up, Sweaty Spaghetti? This was the long idea trade that I was looking for. And like I said, it nearly hit TP, but then it went to break even. This secondary trade that I took, I probably should have just ignored it, to be honest with you, when I think about it. And I'll explain to you why. A+ is when you have price trading away from the liquidity, and then it spikes into the liquidity, sweeps it, doesn't close above it, and then immediately has a reaction. When you start getting price sweeping and sweeping and sweeping and bouncing, this now starts to not look like this, right? It starts to look choppy. So kind of taking positions here makes no sense. I'm going to be straight up with you. The only other reason I took this trade here, okay, is because London low was here. I've often talked about how if London low or any sort of, higher time frame liquidity ERL, if it's not located where the DEQ is and we're just looking at DEQ plays, so if I take this off for a second, if like this setup right here, I would have taken it, even though this was the first swing, but seeing the sweep, I would have taken this, no doubt. But this second setup, I wouldn't have taken. Because when you look at the DEQ, it's just chop. And I've often talked about this with previous setups. The only reason I ended up taking this setup here is because the London sweep was still there. And if you look at the level, it is still holding. Let me just mark it off like this. London low. You see how price is still respecting it? This is the only reason I took it and gave it that chance. And the crazy part too, like I said, is the stop loss placement was the only thing that kind of did me in on this trade, if I think about it, because I had a tighter stop loss, and I'll hold it like this. It did close below. I mean, it did close below the London low. It did close below the daily EQ, but it did not close below this swing point here. So if I'm looking at kind of like in retrospect of like what I could have done, probably could have used the hard stop loss here and said like this is a soft stop loss, because that would have then kept me in this trade. And then, like I said, whatever happened here, whether I took TP early or whether I moved my stop loss to break even, then you have a a good defense to the way that position was played. But anyways, point of my story, this is what this is the type of IFVG you want to be seeing. You want to see structure like this. This is not exactly the best. Okay, so if you see something like this in the future, it might work, of course, but it doesn't mean you have to be participating in it. If you see something like this, it might not work, but you gotta be taking these types of structured plays, especially when you start to get the liquidity sweep that you're looking for. So I hope that makes some sense. I don't think I have anything else to talk about. The only other thing I think I will say is I did partner with TradeSyncer earlier in the week, and I'm able to offer a 30% discount to you if you use code Kira. So you can click on my link in the bio. It'll take you to this Linktree site that I have. And if you want to use TradeSyncer, it's a cloud-based trade copier. I'm sure everyone knows about all this stuff. But like I said, you get 30% discount. You can apply it to the first month if you're going month to month, or you can apply it to an entire, like, say, annual purchase, right? So if you purchase it for one full year, you'll get 30% off that entire year. I think that deal is insane. But once again, you got to put the money up front and use it. And, obviously, if you're going to be playing in this, business, and you're going to have, obviously, multiple accounts and stuff like that with, like, multiple connections, you need to have a trade copier. There's just no way around it. So finding the best discount to me is the way to go. And like I said, I think that's pretty darn good in terms of price. And then, like I said, I also have a few other things that you can use. If you want to join Ashtrade's premium Discord, you can do that here. He live streams every single day now. He's made some big changes with MFFU. He doesn't work there anymore. So all the live streams that he does now are run in the premium section, so you will get access to that. And then I learned IFVGs, which really helped put it together for me, was from Tempo. To me, he's the best IFVG trader I think I've ever seen. And he's got the best course available. It's free. So highly recommend Tempo Trades. Check him out. I got a link for his premium here if you want to use my affiliate link. And then, yeah, other than that, everything else pretty straightforward here. Yeah, I appreciate everyone's time today. We'll be back tomorrow for another trading session, of course, in the morning. Let's hope for some cleaner, smoother price action. Other than that, you can hit me up in the DMs if you got questions, or in the chat, or wherever, and we can keep our conversation going. But once again, appreciate everyone's time today. Hope you have a amazing rest of your day. I have recorded this, as long as it hasn't glitched out on me. I will share it to my YouTube channel. And that's the other thing too I'll say is, like, I posted my YouTube. I should put a link for my YouTube channel. Actually, it is right here. Let me just, well, anyways, you can click my YouTube here. It'll take you to the channel. I made every single live stream I've ever done in this public Discord. I've now made it available on YouTube, like, publicly. Before it was unlisted, so the only way you have access to the links is through the Discord. But I've now just, like, opened it all up. So you can go through everything on YouTube now, create your own playlist with things, however you want to do it. I have started to create, like, an August playlist, so it's just, like, easier access to things. But check it out. It's all there. I will post this one as well. And once again, I do appreciate your time. I hope you have an amazing rest of your day. God bless you. Peace out, folks.